right, we're recording. I'll get the screen up for you. There we go. All right, so we're up and running. What's on your minds, guys? Who's already had some fun today? I haven't seen much so far. Well, I've seen a few different things, but we'll see. Anyways, so we've been having this little conversation about moving averages, going back and forth and different opinions. And I think Piyush suggested we should have a discussion about it. So I think that's a good idea. Let's try and figure that out. Who likes moving averages? Who doesn't? How about we start with that? Raise your hands if you like moving averages. Jill don't like it. Thumbs down, thumbs down, thumbs down. Look at that. 35. I think that settles the whole matter. Yeah, Hamza, go ahead. No, Fraz, no moving averages. Yeah. All right. Hamza raised his hand there. Anyways. Everyone's against you, Tony. No one here is against anyone. If anyone's picking a fight in this room, let me know. I'm gonna kick you out. No fighting. The world has enough trouble and fighting and all that. We don't fight. We're all here to grow together and figure out trading together, right? I think that's what's important. So, anyways, who's got opinions on moving averages? Let's see. Mahi, no indicators. Yep, I come from that background. So you like them on daily and weekly. All right. Do you want to elaborate? You want to share? Use the microphone if you like. Let us know what's on your mind. There are a lot of opinions, a lot of different opinions. So let us know what you're thinking about. I'll share mine. As you all know, I removed moving averages quite some time ago now, and I'm better off without them. For me, they're just noise, unreliable. There's certain instances where they are reliable, but then you got to figure out what instances and what kind of environment are we in that you can actually use it.
Can you guys hear me?
That made more trouble for me than it didn't. Yes, Hamza, go ahead. You're on.
Okay. The reason I like them on the daily and weekly is when you have a bull market, like strong trend in one direction, and like stocks when they pull back and sort of like start forming a bull flag, if you will, I find that more often than not they land somewhere between the 10 and 20s. So it's a good place to get like a discount buy.
Okay. 10 and 20 SMA on the daily chart, is that what you're talking about?
Yeah, like SMA, EMA, they tend to have a similar effect, but it's not like an exact thing. It's just more like a visual guide.
Okay. So you first have to identify if it's a bull market, so it's trending, and then you can use it in the way you said, right? Or on a pullback, you can find.
Yeah, you'd need a big move up in one direction, and then when they pull back to the 10 and 20, it's some very often in bull markets in strong stocks.
All right. That's one use of it. I've heard that before.
But intraday, like day trading or short term, I find them pretty much useless, to be honest.
Yeah. I agree with that stuff. Definitely. When you're zoomed in, looking at 1 minute charts, 5 minute charts, things like that, it's a whole lot of noise. And we know people who are all about putting 4 different moving averages and VWAP all on the chart, on a 1 minute chart, and thinking you're a trader. The whole thing's a joke. So that's usually more noise than anything else, again, selling dopamine. So be careful with that stuff. Now on the daily chart, bigger picture stuff, I understand what you're talking about, where candles are going one way, or the price is going one way, and the moving average kind of tells you about the pullback area. I get that, but you really do need to be zoomed out to look at that stuff. Fair enough. Any other opinions on that? On moving averages? Owen? See, the thing is, even there, Hamza, what you're talking about, I don't even use it that way because firstly, you want to identify whether it's a trending market or not. Well, I mean, look what I've got on screen here. This thing was consolidating, then it went up, and now it's consolidating. I don't need a moving average to tell me that, right? It's pretty straightforward here. And then as far as pullbacks are concerned, I like stationary targets, right? Moving averages to me are moving. I don't like moving targets, even on a daily chart. It's just easier to hit a stationary target. So you have an area where you're interested in an entry, for example. And the way I identify that area is usually with horizontal levels, looking at support resistance, not too complicated. And that makes it easier. I know where the level is. I know why the level is there because I put it there. That's where I see the price bouncing off all the time. So I put the level there, something like that, right? That makes my life easier. And that's it. If it bounces off there the next time, then that's a potential entry right there. Nothing to do with moving average. So the other thing about moving average, in my opinion, is again, it's telling you what's happened in the last few candles, right? The last 20 candles if you're using a 20 SMA, for example. And of course, you guys know how they're calculated, right? A lot of them use the close, a lot of them use the difference between the high and low or the open and close, whatever. There's many ways. But the point is, they're telling you about price action that has already happened. It's a lagging indicator. And as far as I'm concerned, we have candlesticks here that's already telling us about the price that has happened. It's already there. So it's a bit redundant. Again, more clutter on the screen. But again, that's all just the way I see it. Because I've had troubles with them before. I've seen it bounce off moving average. I take trades, and I stop out, does it again. I stop out like 5 times. In the end, I realize, it's just chopping around the moving average. It's not really bouncing off it. So those have been my troubles in the past. And so I think it was 2 or 3 years ago now, I've removed them. And I don't have that problem anymore. Simple as that. But anyways, that's just what I do. Anyone else? Any other opinions? What do you all think? We're talking about the weekly chart as well. All right, yeah. Oh, and you're saying being against. You're a fun-loving person. Good. You're fun-loving. Yeah, no fighting. We have these things called Bollinger Bands. I'm sure a lot of you have heard of them as well. They're kind of standard deviation off of some sort of moving average, usually VWAP or something. Again, moving targets, right? And it causes, to me, just causes more uncertainty of where should I put my targets, the target area to enter and exit. So again, stationary targets are easier to hit than moving targets. And in my opinion, trading is a difficult enough business. Make it as simple as you possibly can, as easy as you possibly can. So you don't have to think about too many things, right? You know what you're looking for. It either shows itself or it doesn't. There's very little gray area. If you can do it that way, perfect. And for some people, that means using moving averages. For me personally, it just means using candles and levels. And nowadays, footprints. So anyways, there's no right or wrong answer, I think. In the end, well, put it this way, I think there's no wrong way to trade. In the end, the only wrong way to trade is the way that your losers are bigger than your winners. So if you're ending up in that situation, then you got a problem. You got to fix it. Do whatever you have to do to make those losers small and those winners big, which means you may have to try different things, including moving averages and different kinds of volume charts and pink backgrounds on your chart. So whatever, man, whatever gets you to think correctly. You have to try different things and then identify the 80-20 of it, as in what are those few little things you got to do that give you the majority of the results, and then double down right there. I think that's trading. Now, again, for a lot of people, that will involve using moving averages. And again, just because I don't like them doesn't mean you don't have to like them. You can trade them if you want. It's up to you, of course. But anyways, that's what I think. Anyone else want to talk about moving averages or any opinions on those sorts of things? No. Guys. All right. Until anyone has anything else to say, we can look at this real-time price action. So I've got here the MES, S&P futures, and I'm looking at the 4-hour chart here. It's a little different than the 30-minute. I've been paying more attention to this chart this week, just out of curiosity, really. And one of my thought processes is If I'm looking at a 4-hour chart, that's 8 30-minute candles inside of it. So just looking at one candle instead of 8 makes life easier. And it's not so big that it's unreasonable for the kind of trading I'm doing right now. When I did look at the 4-hour chart when I was actually day trading, using just the New York session, it was too big, I found. I couldn't find enough opportunities, at least for my mindset. But nowadays with the futures market, I think it's perfectly reasonable. The market's open almost perpetually, really. It only closes for an hour a day. So zooming out, looking at bigger perspectives makes perfect sense. So anyways, I've just begun to explore the 4-hour chart, maybe replace the 30-minute with the 4-hour. Doesn't mean I'm going to replace the method. The method's all the same. Find levels, support, resistance, breakouts, retests. Nothing changes, really. So anyways, this is what I'm looking at for now. Let's see if it's insightful or useful. So this is the S&P. We had the big push up. And yesterday was a choppy mess on this chart. And so far, overnight and now, it's still right there. So I've put horizontal lines right there, support and resistance, and I put alerts right there. Just in case it happens to break out, I get an alert, then I can look at it and see if there's something interesting, a breakout or a retestable breakout to catch. It'd be fun. If you look at this, zoom out a bit, you basically have, what do you call this? A bull flag, I think. I don't even know. There's so many terms out there. Just ABCD pattern, really, on a 4-hour chart. And it goes, it consolidates, then ideally it goes again. And again, in my opinion, there's only 2 things that ever happen in the market. Only 2 things. Either it goes sideways or it goes directional. And that's it. So what I like to look for is sideways. Because when it's sideways, the next thing that happens is it goes directional. All you got to do is wait for it to begin going directional, as in stop going sideways. And you can see that right here. It was directional. This was a news thing, but it was directional. Now it's going sideways. So I'm not going to play with it. Same thing here. You can see it was all pretty much sideways on a 4-hour chart. These last few days have been kind of tricky. Got a little volatility here, but I think that's messy. These markings here are from the 30-minute chart. You had it, look at that. This is interesting. Zoom out a bit on the 4-hour chart. This thing came down. Decent looking double bottom. Not ideal, but it's there. And all this whole double bottom area, I would call it sideways. Then the breakout, and you would have an opportunity to catch a move if you're watching for it over here in the breakout area. So there's only really 2 things, sideways and directional. And again, so I'm looking for the sideways action. And then the next thing is directional right here. This thing goes sideways, looks like a double top, almost perfect. And then it goes directional, right? So we have a good example of that right here, right now, today. If I'm trading the 4-hour chart today, I would not be looking at it, not be touching it at all, or even yesterday. No chance. Or in these last few days, hardly be touching it. Not much there. Let's look at the M&Q, NASDAQ futures. Yeah, same idea. Directional, sideways. It's going nowhere. These are all kind of boring tickers, but oil has been interesting again today. I'll show you what I'm looking at. So we have the big drop on the ceasefire news, and then it's been sideways on this 4-hour chart. And then I identified this wedge, which I just identified, by the way, about a half hour ago. So I wasn't looking at it here earlier today. And identified this ascending wedge. The breakout looks nice and clean, and it's sitting up there now. So if it comes back and bounces off again, that's the retest. That's when I've already got some orders to enter. There's the entry, there's a stop, and there's a target, if it all works out. And I want to show you, very importantly here, if I get entered, the risk is $425 on it if I stop out. If it works and I get filled to the target, it's close to $15,000. So that's what I'm talking about, asymmetry. I've just put this in. Let's see, I've got an alert set here as well. If it comes and I look at it when the alert goes off, and I'll take a look and see what happens. But this is asymmetry that I'm looking for. And the reason the target is there is, well, to go all the way back where it came from this sideways action, that's a long way up, right? I think that's a bit of ambitious. So I'm looking further down, look to the left, you can see it in this area. It's a bit of a false breakout, if you want to call it that. You can see the wicks right here pushing down. So it's a fair bit of resistance right up in this area. And so that's where I've got the target, just a little below that. Let's see if that feels great. Other than that, I haven't traded anything today. Nothing at all. I haven't found anything. I haven't really been paying attention also. If I was looking at this earlier, I probably would have found an entry somewhere on a 1,000 tick chart retest. but nothing for now. Yesterday, it took a few attempts at a few trades. Everything ended up at break even. So that's the best. When you can give yourself an opportunity to make money, I mean real money, as in lots of asymmetry. And if it works, great to make money. If you don't lose anything. Yesterday was one of those days. Didn't lose anything, but I gave myself a chance. So that's the way I'd like to go. What do we got here, Tony? I wanted to add for the topic of moving averages. Feel naked in the chart without them. No wonder why it's called naked chart. You got to think in there. All right. Yeah. So Tony, naked charts are not just no moving averages. It's actually no other indicators at all. And actually what I've got here right now, these are footprint charts. You can see the footprint information on these candles. So it's not actually pure naked trading like I used to do. I've added these footprint candles onto it. So there's one additional indicator that I've put in. For now, I like them. I've been using them for about 2 months, I think, and I really like them. They've been allowing for excellent entries. So, but yeah, naked trading is interesting because you don't like to feel naked, right? You want these moving averages feeling like you got support and all that stuff. But really, what you want is to be able to really cleanly and clearly read price action. You know, whatever it takes to do that, do that. That's what I do. And for me, removing all the distractions, and including the volume bars at the bottom of the screen, removing all that just helped me just look at candlestick patterns. I ended up getting pretty good at that stuff. And for a long time, I traded just pure candlestick patterns. Went into the options market even with that stuff. It was great, fantastic. I'm pretty much doing that now as well. Not too many things here. So yeah, naked trading is unusual. A lot of people are afraid of it because a lot of people don't trust themselves to be able to read patterns. But you know, it's actually quite the contrary. Once you remove the distractions, then you can focus. Right? I think that's important. I go in that direction. So that's why I don't like moving averages or MACD or volume or I don't know, even pivot levels, because I don't even, they're horizontal lines, but I don't know why they're there. There's a mathematical calculation behind them. Whatever, man. I just put levels where I think it should be. Because when I put a level there, I know why it's there. I know that that's where the price keeps turning around. It's support or it's resistance or whatever. So when the price does get to it again, I can trust it. I know I can put risk on against it. I can risk my own money against it. If there's something on my chart and I don't really get it, don't know why it's there, I'm going to struggle to put risk on against it. Let's say I do put risk on against it, then I'm going to struggle with managing the trade because I don't really trust it, right? Then it's called mismanagement. Then you'll end up losing money. So, I mean, as a quick example, right here on the chart, you can see this level right here. You know, price started going up and made a little peak there. Pretty much got very close to that. So I just put the line right there. So I know that's firm resistance. And when the breakout happened, boom, there you go. It's a firm breakout right through that area. And I know why that line is there because that was resistance. And big buyers, big players came in, and off it goes. Breaks right through it. I can trust this level. If it comes down and bounces off, I'm right in this game. Right? I trust this much more than any sort of pivot level or something of that nature, because I know why it's there. Makes life easy, very easy. What about Ollie? Do you use horizontal levels or only flag and channel patterns? Yeah, Ollie. So horizontal levels, the way I'm doing them these days is actually just like this, where I'm first just trying to identify a consolidation, right? There's only two things that happen, like I said before. The market is either going sideways, consolidating, or it's going directional. Once I identify a consolidation, I'll just put the levels on top of those. And I've been doing that on a 30-minute chart, which is decently large. And now I'm thinking to move even larger. The 4-hour chart makes sense. This week, it's only this week that I'm looking at it. And so far, I like it. So I'm really just putting levels based on most recent consolidations. And ideally, you get a triangular consolidation. This is an ascending wedge that leads to a good breakout on the upside. You can rely on it. Or on the other side, descending wedge and the breakout to the downside. I like these kinds of patterns. That's where I'll put these levels and see. If they work, they work. Great. That's how I'm doing it. Zoe said, do you find the New York levels to be more important than the Asia London? I haven't got a clue about Asia, London, or New York. I don't pay attention to that, honestly. Brian's the one who does all that stuff. He'll tell you about different sessions and how one session overlaps the other and sweeps the other, and therefore you can have an indicator. All that makes sense, but that's not what I do. I just simply look at candlesticks. And I want to see a consolidation that leads to a breakout, that leads to a retest, all of it with room to the left. So I don't care what session it's in. I really don't care. Doesn't matter to me. Mohit, do you want to know about what the MCL trade entry on a smaller time frame? Yeah, sure. All right, so this is a 4-hour setup. I'm not in the trade. I wasn't watching it like 10 hours ago. I wish I was. I would have found an entry probably over there. So anyways, here's that consolidation, the resistance, the ascending wedge, the breakout happened. I've got the orders in to get in here with the stop there and the target there if it comes back and goes. We'll find out. Now, what I would do after this, if let's say the breakout is beginning to happen, you're looking at it, and the 4-hour candle is sitting up here and the volume's coming in, it's breaking out. That's when I'll go into the 1,000 tick chart. That's this one. And you can see it. You know what? I got to get rid of these. There's a lot of these silly little lines here. Get rid of them. Anyways, here's the breakout when it happened. Here's the retest on the 1,000 tick chart. If I was truly sitting here and watching it, I would have most likely just gotten in here so aggressively. And yeah, there you go. Things on its way. We'll be halfway to the target by now. Now, zooming in, that's a 1,000 tick chart. It's not a time frame chart. You're asking about a smaller time frame. I don't really use time frames much anymore. But what I would like to see here to begin with, that's the resistance. You can see the anomaly. There was a lot more buyers than sellers. So when there's more buyers, price should go up, but it didn't. It went down. Anomaly, right? Then when it does break out, it breaks out, and you can see there's buyers further up, higher than previously. And in this case, it's not an anomaly because generally it's gone up. Here's a tiny little small picture retest. If you want to look at it, came down a bit, small anomaly, and off it goes. That's not too significant to my eyes. What's important is above the resistance, you want to see the aggression. Those market orders come in and hit and buy. And you can see, just zoom in even tighter on this one. Right there, you can see how heavy this bar is. 104, it says. A massive imbalance, many more buyers and sellers, right? And sure enough, that is what sustained. And when it came back to retest, happened to be precisely at the previous anomaly. Look at that, how precise is that? And so at this point, when the price is coming down here, this is where I would be looking at it. And what I'm looking for is basically a reversal, right? It comes from up to down, turns around. And so on this reversal in a small picture, I want to see the anomaly here. Again, a lot of sellers here, more than buyers, but the price did not go down. As soon as it starts going up, I'm curious. I'll look to the left, and you can see massive selling right here. Just these two would be enough for me. And when I start seeing volume green bars, basically these green bars happening above this negative 134, so right about this area, you can see it happened right there. This is most likely where I would have entered if I was watching it at the time. So again, the anomaly and then the confirmation is that the buyers are aggressive above the most recent heavy sellers. Right there. That's your reversal setup on these footprint charts. Not trying to catch the bottom here, that's too dangerous. You need a little bit of confirmation. So I have basically two levels, the anomaly and then the aggression. And it's with the aggression that I would most likely get it. Stop below and off it goes. And if I'd taken that line, it would have been okay. It would have been the right entry. But anyways, let's see. It could still come and give you a retest. Now, this is a 1,000 tick chart. If you go back to a bigger perspective, which is in this moment, I'm looking at 4-hour, all that's happened is it's broken out. It hasn't done a retest yet. That could happen, right? Could happen this candle, could happen a few candles later. I don't know. A few candles later tomorrow at this point. So we'll see tomorrow then. So this is an interesting one. Anyways, that's how I'm looking at it. We got here, Tony. A big move. Been using the 5-minute only, transitioning to the 10-minute. Yeah, good. Again, listen. It's simple as this. The bigger the candlesticks you look at, the bigger the trades you can actually target realistically. And then the only limitation really becomes time. Can you sit here and wait for 4-hour candles to set up? Do you have that kind of patience in you? Or are you restricted to just trading the New York session so you can't wait that long? These kinds of questions will pop up. Personally, whenever I have these kinds of limitations, I like to remove these limitations. So what can I do to remove the time limitation? Well, I've gone to the futures market, which now I can trade 23 hours a day. I'm not tied to the New York session. Actually, avoid the New York session. Avoid the New York Open specifically. That's just a disaster. There's no point doing that. And now the opportunities are just huge in all of my trades. all the winning trades have been, in the 10+R category. So all fantastic. Even this one, if it happened, if I wasn't it, I mean, this, I don't know what, 20R, if it had happened, it could still happen. Maybe later today, maybe tomorrow, I don't know, whatever. We'll see. Keep an eye on it. You want to go to the 4 hour from the 30-minute, Tony? What are you talking about? Well, I can't say I've transitioned. I've only started looking at this week. It just makes sense logically, right? I have time on my hands, and I'm not restricted to the 30-minute chart. It worked great for trading the New York session, which has what, 6.5 hours of trading, I believe, something like that. But I have 23 hours of trading a day. So why am I looking at only a 30-minute chart? And that's what popped into my head. So I've been looking at this. No big deal. Yeah. We've had lots of moves on oil. So let's look at this chart, the 4-hour oil chart in the recent past. You look at, here's a consolidation area. You can see there's the top right there. Here's the whole consolidation, and the breakout happened, a retest happened right about there. Go just on a 4-hour chart. There's your breakout, there's your retest, off you go long, right? So that would have been a decent opportunity, I think. Let's look further down here. Same story. I think this is the one I caught last week. On 30-minute, I can't remember. So anyways, there's the top, there's your breakout. The very next candle is a retest. Okay, off you go. This one happened to break to the downside. There's your support zone, something like that, somewhere there. Breakout, retest. I'd probably get out of break even on this one. Didn't really make a big move down. So there you go. And there's opportunities. Look at this, a real neat flat top right there with an ascending wedge. There's your breakout. Off you go. It's not too complicated. The nice thing is, again, there's less to look at compared to a 30-minute chart. So I'm enjoying that at the moment. Let's look at so less to decipher, less effort, getting bigger results. That's 80-20, right? 80-20 is what I'm all about. You guys know this. So, and as you can see very clearly, there is no space, absolutely no space for moving averages in the middle of all this. Forget about it. No moving averages, all right? Anyone say moving average again, I'm going to laugh at you. No. Anyways, so that's what's on my mind these days. That's what I'm doing, what I'm trying to do. Enjoying the little ceasefire here. We had no drone and missile alerts today in Dubai. Great. Peacefulness. We still don't have the traffic, so that's good. That's good. I like it this way. Anyways, that's that. So what else is on your mind, guys? What do you want to talk about? So a few good trades in our screenshots channel. Tarek again with the gold. I think Hamza, you had a big one yesterday. Is that right? Saw a few earlier. Looks good, man. Looks good, you guys. I love it. I can't seem to catch a trade like today. I missed this one. Yesterday was all break even. So we'll wait and see. Eventually get something. This is gold. Look at that. If you identify this area as a consolidation, even with higher lows, very good. There's your level. There's your breakout. The retest happened, 20 hours ago? Something like this. In this area. Probably stop out once or twice trying to catch it, but no big deal. That one's interesting. Interesting down here as well. And gold is something I haven't really got a grip on yet. I've traded it a little bit, but not really familiar. Well, look at this one right here. Consolidation, there's your breakout. This is a good example, even with the lower highs, descending wedge before the breakout, and off you go. Another consolidation here, another breakout to the downside. Yeah. I mean, just looking at setups and just looking for consolidations and putting levels on them on a 4-hour chart, I think is pretty large. You could do a whole lot more than that. I mean, what's next? You could just go with highs and lows on the daily chart. That works. You'll probably end up in similar areas, similar levels. That's probably next. But yeah, we'll see. So, what else is on your minds, guys? Oh, look at that. Getting the breakout now. Is we getting the breakout? There we go. On MES, there you go. That's the level I have in mind. So this is based on this candle here and this candle, the same area. So just looking at this 4-hour chart, here's what's interesting. The price has gone higher than the resistance. And at the moment, A lot of good buyers, a lot more buyers than sellers. Hey, so it's getting interesting. You have some overhead resistance, but this was the tight consolidation area. That's why I put the level there. Let's zoom in and see if there's anything going on with the 1,000-tick chart. Oh, where'd it go? All right. Oh man, these levels, these highlights are a bit of a problem. Can't read anything. Hold on, let me get the settings sorted out. There's something here, unfinished auction. I don't even know what this means. Anyone know what this means? Unfinished auction. Volume footprint complete. Whatever. It's all noise. Don't know about this. I'm done. Get rid of it. There we go. Wow. My eyes don't hurt anymore. All right. So on a 1,000-tick chart, you have the resistance and well, it's a bit of a tricky zone overhead. Oh, look at that. Eesh. You don't want to be going up against that. Every time it goes there, it just shoots down. But anyways, here's the resistance area. Here's the breakout. Yeah, see the 1,000-tick chart is just not convincing because that resistance overhead. So the breakout happened, not very neat. You had lots of buyers just above resistance, but yeah, they kind of held, you could say. Big anomaly here. Look at the volume, they're huge. And the price went up. Then the second retest. Oh boy, that's what just happened a moment ago, it looks like. The price is on its way. It's the second retest that I really struggle to trust. And it's just, this has happened quickly. This is what, 11:16, then 11:27. What, about 10 minutes or so? This is tricky. What I like to see with breakouts, really, I want to see it go. Because breakouts are a momentum situation, right? I want to see it really just go away. Break out, lots of momentum, and get away from it. Then come back and retest later. That creates a great big gap here, right? Room to the left. Over here, this is just 10 minutes. It looks tight. Even on the chart, it looks tight. The setup is there. I mean, if you are convinced that it's close enough, or rather the time is right, then you have the anomaly, as in more sellers and buyers, and the price went up. And here are your aggressive buys right there. Very aggressive, 435. Just above the recent level of sellers. So that would be the entry point right about there. Stop below. Now, if you go, this would have been, what, 5 minutes ago? I wasn't even looking at it. But no, this is not, because of, if this didn't happen this way, if this really went some distance, then came and did it, that's cool. And that could still happen later. I want that room. Leave that room to the left. So, but anyways, there you go. Setup stuff, not so bad. You also didn't get that consolidation right before the breakout, right? These are things that put doubts in my head. So I don't like to mess with it. Anyways, that's there. Something good to look at. Tony, what are you saying? As far as I see, you use only breakout retest strategy. I'm wondering about your opinion on range trading, specifically trading between yesterday's highs and lows. Found it hard to catch a good verse. Yeah, so Tony, what I'm doing is breakout retest. But let's make sure we understand what that truly is, because it can be misperceived. If you look at this, okay, it's a pretty decent example. You have a consolidation, you breakout retest, right? Simple enough. This is just a continuation pattern. But also zoom further back. I'll find you an example. Here's one right there. Comes from up to down and reverses, right? This is a reversal setup, and it's the same thing as the breakout retest. Because I would put, let's get the levels in the right place. I'd probably put it here if I was looking at it on this chart. There's your resistance right about there. Your support's down here, and then you have this whole zone as your consolidation, right? Then when the breakout happens, I'm looking to catch the retest and go breakout retest. Same thing, but it's actually a reversal, bigger picture. And I've actually intentionally incorporated this breakout retest thing into catching reversals, because catching reversals like down here at the very bottom, or trying to catch the bottom down here, these are very difficult trades. This is where you blow up accounts. This is where you overtrade. You stop out once, you try again, you do that 3 times, you get up frustrated, and you're just catching a falling knife, and a lot of people move their stops out of the way and hope for the best and then blow up. So instead of trying to catch these bottoms here, I just let it consolidate. And then once it consolidates, it's either a reversal, which is a breakout to the upside, or it's a breakout to the downside, which is a continuation. But let it consolidate, then go. So really taking the whole thing of catching breakouts, catching continuations, catching reversals. If putting it all together and going with the 80-20 route, it's all just breakout and retest. So really all I'm looking for is consolidations, so breakouts and retest. That's it. It's just 80-20 now. In the bigger context, you can see them as reversals sometimes. Sometimes continuations, sometimes just genuine breakouts out of a massive consolidation. But that's how I've narrowed it all down into this. And it's just simple. It's just easier, especially with the futures market opens 23 hours a day. If you're looking at some big time frame like a 4-hour or a 1 hour or even a 30, I think it's pretty large already. It's okay. You'll find opportunities all the time. You guys have seen me find these all the time. So yeah, a lot of people would call this a reversal. You got to catch it down here. I'll be like, absolutely not. Let it consolidate. Let it break out from the consolidation. Catch it up here in this area and then retest. That's what I'm interested in. If you look at this, this is interesting that we have it on the chart. Take a look at this. These little drawings you see here, these are based on the 30-minute chart. Right? Little drawings that I had done. And I believe I took this trade from here and I went long. This was one. I'm not sure. Anyways. And if you're looking at this 4-hour chart, there's nothing to draw here. These are just individual candles. There is no pattern, no nothing. So this is a good example of really when you zoom out to a bigger time frame, you see less setups. Therefore, you trade less. Therefore, you lose less money, right? For those of you degenerate day traders who just overtrade, revenge trade, all that stuff. If you're really having a trading problem as a trading addiction and you can't stop trading, look at a bigger time frame. Really look at it. You wouldn't have drawn anything here if you're looking at a 4-hour, right? I would have just drawn this most likely on these few days and waited for it. So there's an example of how time frames work. The bigger you go, the less opportunities or less setups you see, but then the more conviction you have on those setups. And like I said earlier, then the only limitation you have is time. And whenever the word limitation comes up in my life, you know what I do, right? I just remove it. I remove the limitation. I find a way to remove it. I don't like limitations. I believe in freedom. So if time is a limitation, well, I remove the problem. I'll do whatever I have to do to make sure I have time on my side. And that's that. So yeah, no more. I don't trade what are called reversals, though even on the chart, it can look like it's a reversal. Really, I'm just catching a retest or a breakout. That's how I would do these things. This would have been fun, huh? Buy some options contracts right before the deadline on the ceasefire came out. This would have been huge. And that's that. There you go. You got it. Cool. Reversal continuation. You're making money with swing trading, holding it for a couple of days and weeks, and started losing money with day trading. Yeah. There you go. Yeah. Day trading is, I don't know, man. It's one great big scam, really. The whole thing, the whole freaking thing. I made money with it over the years, but I lost plenty in the beginning, those first couple of years. My goodness. And then once I just started doing things my own way with independent thinking, not following, jerks on the internet saying, look, use this chart and that moving average and that, whatever. Started thinking about it my own way. That's when I bumped into the 30-minute chart. Then I bumped into options. And then I bumped into a totally different way of doing levels, like using the market makers with the 8 a.m. candle, right? This is all beyond day trading. You're looking at different things here. And now I moved even way beyond that, looking at opening up the entire market, not just day trading, but a 23-hour market. So, yeah, that's how I like to think of this. Day trading is tough. 99% of people, really struggle with it. Really struggle. So I'd say remove the restriction of day trading. Just call yourself a trader and just focus on trading, right? You can call it swing trading, call it whatever. I don't care. I just call it trading at this point. I don't even care. 5-year positions, those are investments, but really I just call it trading. I put it on and 5 years later I take it off. Don't put the whole idea of day trading in your head, because all the connotations that go with it, right? We're all stuck with it. Everyone's stuck with what's been popularized. Trade the New York Open, ORBs, VWAP, lose money, blow up an account, buy another subscription. Well, you guys know the whole drill. It's just a damn shame. I was a sucker to that too when I first started. Yeah, what a shame. There's so much more out there. There's so much more money to be made. Really, and in a much simpler way, much simpler. And then life is good. So make life easy for yourself. Please do that. Otherwise, you're going to end up hurting yourself. So. All right, so on this 4-hour chart, it looks like that breakout we were looking at earlier is well on its way. Now, what's truly interesting is let's move this level up here. You can see that's the absolute resistance of previous day's high. Basically, you can see that's where it's gone up to and struggled now. If that breakout happens, that would be fun. Now, these are 4-hour candles, don't forget. So it's going to take, I don't know, 16 hours to happen. It'll be into next week when we finally get the setup here. What is this? Oh, this is an alert. I'll put this here. Just so the breakout happens, I'll get it. Let's change color now. Whatever. There's the alert. So if the price gets up there, that's telling me it's above that resistance. Maybe it's time to look at it. So there you go. Look at that. That would be a big setup. If we get a good firm breakout from here and then a retest, there you go. You have something big, something you can hold on to for 5 4-hour candles, right? Cool. Let's have a look at the 1,000 tick chart, see how it's all working out at the moment. There you go. Yeah, it's just sitting in this area. So that retesting, it happened, but not as neatly as I like to see. I'll show you the difference. This is the one I explained to you. I don't like the way it happened. It bounced off twice quickly. That's a bit unnerving. Look at the one on oil. This is what you want to see. Momentum breakout as you go some distance right away. And later on, it creates a gap on the chart before the retest. This is the one I wanted to enter. Again, I saw it probably 10 hours after it happened. Look at that. Now my dealer will pick up the order I've got set there. If it gets into this area, I'll remove the order, and if I'm watching it, I'll do it manually. I'll watch it and I'll enter it. Let's see if all that happens now. That'd be fun. Otherwise, I could possibly just leave it. So that's the difference anyways. Breakout, it goes quickly, goes some distance, creates that room on the chart, that room to the left for the retest. That's very important. Room to the left is still one of those most important things I like to look for. So there you go. Fun stuff. What's happening here on the NASDAQ is probably a similar setup here. Let's see what. There you go. This is a mess. Oh yeah, you were asking about range trading earlier, right? I think, Tony. Range trading, you identify this as a range, you go back and forth, up and down. Yeah, these are 4-hour candles, so there's plenty of time between trades. But again, it depends on what perspective you choose to look at. I'm looking at this, and this is chop. I don't like to do chop. I just like to go where there's room to the left, there's a clean chart, and then you start to have more fun. So look at this. This was a tiny area, resistance, false breakout. Now the breakout's happening. It's very hard to trust all this. You can see how the MNQ or the NASDAQ is a lot more squirrely than the MES, right? A lot more tricky to trade. Generally, you want wider stops. Call it just more volatile. If you're on the right side of it, great. But I struggle to put on the kinds of risk on MNQ as I do on MES. I just trust MES more. What else we got here? Makes more sense. You do it, not get chopped in the range. Yeah, don't get chopped, man. Chopped. And it's really simple. If there's no room to the left, it shows you that the price is happy to be there. If there is room to the left, it's showing you the price does not want to be there. It's new territory. Just think of human nature, right? When you're in your comfort zone, you're happy to be there. You'll sit on the couch all day. It's your comfort zone. Why would you get up? Why would you move? But the moment you're out of your comfort zone, well, now your senses are heightened. There's something else going on. You're not likely to sit still. You're likely to make a move, right? Do something. Get active. Same thing with the price. Doesn't mean it's going to continue going where it came from. It could reverse from there or continue. You can do either thing. But the point is there's room to the left. It's out of its comfort zone. That means it doesn't want to be there. Something could happen there. So if you get a setup with room to the left, that's when I like to take it. Right? That's how that works for me. Anthony, what do you got? How often do you find yourself checking charts in this futures environment, specifically watching 30 minutes? I can't imagine you're checking every 30 minutes. With the 30-minute chart, yeah, for a little while I was looking at it every 30 minutes. And I realized, well, that's not right. I don't want to be doing that. Sometimes I'm doing something. I don't want to be disturbed for 3 hours, you know? So that doesn't make sense. So I zoomed out of that. I started putting alerts on, and it would just buzz at me whenever. But I'm beginning to believe that it's just simply easier to look at the 4 hour. But only this is only the last couple of days. Let's see if it lasts. It's fun. I like it. It's so easy. It's so slow. Less trading. Which when you have a 23-hour market, that's a pitfall. You could end up over trading, right? But if you're looking at a bigger time frame, there's less setups. It just helps solve that problem a little bit. So 4 hour charts. Well, look at it every 4 hours. How many hours am I awake in a day? I feel like I'm awake about 20 hours a day, truthfully, for the last 5 years. So you look at about 5 candles, something. I don't know. Anyways, yeah, 4 hour. I mean, it's okay. Let's see how it goes. If it's really being problematic, I'll go back, shift down maybe to a 1 hour. We'll see. But these last few days have been interesting. Again, just observing it, it's good. I think 2 weeks ago, or at one point last week or something, I think you guys saw me take trades based on the daily chart. And that's okay. That worked, but it was a little bit tricky. And what I observed is that for those kinds of trades to truly work, it needs to be a truly trending day, a day with no wicks on either side and a large candle, a daily chart candle like that. Now, before the day opens, can you tell me that's the kind of day we're going to have? If you can give me guarantees on that, then I can go with that daily chart method. But that's not, I don't think that's reliable. I had one solid day where it was that kind of day, and I took 3 trades that were all 10R. But I think that it was just more based on the day was that way rather than the method is reliable. So I'm not going to go much bigger towards the daily chart. I think that just might be a little too big for now. There we go. And then Q on its way. Let's put this up here. And so there you go. You got that resistance zone up there. Let's see what happens. The MES is probably more interesting. There we go. Yep, right at it. It was fun to catch that breakout, but it went. And now the fun is a consolidation and then the breakout. But let's observe this on the tick chart. There it is. This could be fun. It did that consolidation a little lower than the resistance that I'd like to see. That's my alert point there. And let's see if this was resistance. It was. You can see that there was more buying volume. Let's zoom in a bit. Here we go. That was resistance. Then the buying volume came in just about in that zone, which has been proving to push up so far. But we know this big white line is the reason it's there. It's a massive resistance point. Here on the 4 hour chart, it's right there. Right there. So you don't want to play with it. And sure enough, look at that, struggling for now. Wait for it. Wait for the breakout to be genuine, as in let it really rip, consolidate, break out and go, then the bounce off. Then we got something. Would have been good to catch it down here, but really the setup is not there. I looked at it in hindsight anyway, but looking at this double retest thing, that's tricky. Yeah, you're welcome, Anthony. Anytime. Anytime. I enjoy this. Trading is all right. It's good fun. Makes you a lot of money. Keeps life fairly simple. And can't ever imagine putting on a suit and tie and go march down Wall Street, do all that corporate stuff. There's no way you'll find me doing that. Never. Can't even imagine it. I'm probably completely unemployable at this point. Completely. Somebody tells me in an office, go and do this. I'm like, go fuck yourself, man. I'm not doing anything. I'm looking at the markets. It's like that. It's so funny. I can't be employed. Anyways, this is a great big mess. Let the alert go off. It's up here. That means the price is up in this zone. Then it might be worth looking at. And then it's a breakout. So let's see. That's that. All right. Anyways, moving averages. Everyone have any other questions on moving averages? Everyone good with it? I wanted to discuss it. Lots of different opinions. Everyone's got opinions. Please do share. Again, I don't believe there's a right and wrong. These are all just opinions, right? So this is our little opportunity to have a discussion about it. Hey, come on, Tony. You can make me laugh. I like laughing. Laughter is the whole point of life. You're gonna be all serious all the time. The world is so full of crap anyway, man. We gotta find something to laugh about. Don't be shy. Just share it. It's all good, man. It's all good. I'm not here to prove anyone anything or prove any points or nothing. I'm just here to trade and have good people around me when I trade. That's all there is to this, really. We can all trade together, learn from each other, grow. That's it. That's what this is all about. You know what I'll do on this 4 hour chart? I'll go watch the new Peaky Blinders movie. And by that point, this chart will have set up for the breakout, and I'll catch it about 3 hours from now. How about that? 4 hours. You know how much you can do in 4 hours? There's a lot. There's a lot there. What happened, Oliver? Audio. Yes, you gotta unmute. Audio problems. All good. Cool. All right. Fun. Let's end this recording. Get it out there. Oops, where'd it go?